December's Consumer Price Index report is out today, and it shows no change from the month before at 2.7%.
And the report offers a key read on inflation to wrap up 2025, and that could indicate where prices in 2026 are going to go, right? That's what we're all focused on.
We've been talking about that. So to break down these numbers, let's bring in Sam Goldfarb. He's a markets reporter for the Wall Street Journal and joins us now. Sam, so what stood out to you in this report?
The report was mildly encouraging from the perspective of economists and Wall Street, because even though the headline prices were unchanged, as you said, at 2.7%, so-called core prices, which strip out more volatile categories that just kind of go bounce around, food and energy, that was a little less than expected. So all in all, modestly encouraging report to end the year.
You know, I was going through the report this morning, and I find myself going, okay, now we've had 2 months where you've seen inflation go down or remain stable. And that came after a number of months, I think going back to April when we first had those tariffs announced, where you saw it increase. Do you think 2%, though, as the Fed's target, is even achievable for inflation? Or are we just more going to be somewhere between 2 and 3 in the long run?
So if we were at the low end of 2 to 3, I think many people, at least again on Wall Street, would be satisfied. And many people do think that we'll get into that range by the end of this year. So I don't know for the average person whether they're thinking of it in that way. They are still feeling the effects of the huge price increases that happened a couple of years ago, and even now we're not. Inflation isn't at 2%, so prices are still rising faster than the Fed's 2% target. So it's somewhat painful for average people, but the experts do see a trajectory down at least close to that 2% level by the end of the year.
All right, Sam Goldfarb, thank you very much, Sam, as always. Appreciate it.
Thank you.